Every trader begins with a dream. Not just a plan, not just a number on a screen, a dream. The moment you open your first chart, something inside you believes you found the secret map to freedom. You picture yourself catching that perfect move, doubling your account, finally proving that all the sleepless nights meant something. It's beautiful, it's intoxicating, and it's the beginning of your biggest illusion. Because somewhere between that first click and the next red candle, something subtle happens. Expectation takes control. At first, it looks harmless. You tell yourself you're following your plan, just waiting for your setup. But deep inside, you start whispering to yourself, "Please, let this one work." You start hoping. You hope the price goes faster. You hope it doesn't hit your stop. You hope the market just turns around one more time. That single emotion, hope, feels gentle, even helpful, but it's the seed of destruction. It turns discipline into hesitation and logic into denial. Hope freezes traders when they should cut losses. It blinds them when they should see danger. And the scariest part? It feels exactly like faith. Hope makes you believe that the next candle must be green, that maybe if you hold just a little longer, things will go back to normal. But markets don't care about your hope. They reward probability, not emotion. Now imagine this. You enter a trade. Everything lines up perfectly. The setup, the timing, the confirmation. You feel calm, in control. Then the market moves against you. A small dip. You tell yourself it's fine, just a retracement. Another dip. Still within structure, the candle keeps falling. Suddenly, you're not thinking anymore. You're praying. You whisper, "Come back, just once more." Think about that. At that moment, you're no longer trading. You're bargaining with uncertainty. You've replaced execution with emotion. And the market, cold and impartial, just keeps doing what it does. It doesn't owe you a reversal. It never did. Hope isn't optimism. Hope is emotional resistance to reality. It's the mind refusing to accept what the chart is screaming. It's you turning a losing trade into a potential comeback, a clear trend reversal into a temporary pullback. The rules you swore to follow become optional just this time. That's how traders lose everything. Not because the market is cruel, but because they refuse to accept the truth that's already on the screen. Hope is a survival emotion. It's what kept humanity alive in wars, disasters, and darkness. But in trading, that same instinct is deadly, because trading doesn't reward emotion, it punishes it. The market doesn't care about your dreams, your effort, or how much you need the win. It only cares about behavior. Think of it this way. If you are a soldier trapped in battle, hope might keep you alive. But if you're a trader trapped in a losing position, hope kills your capital slowly. Professional traders know this difference. They've trained their minds to replace hope with acceptance. When a trade hits stop loss, they don't argue. They don't pray, they execute, they exit, they move on. That's not coldness, that's maturity. Because maturity in trading isn't about predicting the market, it's about responding to it. You can't control what happens next, you can only control what you do next. Here's the trap. Expectation doesn't only live inside losing trades, it begins long before you click buy. It begins in your imagination. You picture the profit, the thrill, maybe even the screenshot you'll share with friends. That mental picture becomes your emotional prison. When the market starts to move differently, it doesn't just threaten your money, it threatens your story of how it was supposed to go. And when that story breaks, so does your discipline. That's why so many traders with great systems still fail. They enter every trade not with execution in mind, but with outcome in mind. They judge success by how much they made, not how well they followed their process. Ironically, the moment you stop expecting, the moment you let go of hope, is when you start trading well. Because your focus shifts from wanting the market to move a certain way to observing how it actually moves. You start seeing clearly. You stop fighting. Let me tell you a story. A trader named Daniel, just like you, smart, dedicated, disciplined. He had a solid system, clean setups, tight risk, 2-to-1 reward. But after every losing streak, he'd change everything. New indicators, new methods, new mentors. He wasn't analyzing, he was chasing hope. He believed that somewhere out there existed a perfect strategy, one that never loses. The truth? Every strategy loses. Every professional trader takes losses. The difference is that professionals expect imperfection. They don't demand certainty. They don't hope for perfection. They trust probability. Daniel couldn't accept that. He believed if he worked harder, if he tweaked enough, if he waited long enough, he could avoid pain. But that's not mastery. That's addiction to control. Real mastery begins when you stop trying to avoid pain and start learning from it. Losses aren't punishments, they're feedback. They tell you whether your decision was correct based on your rules, not based on the result. If your analysis was solid and your risk was managed, that's a good trade, even if it lost. If you broke your rules and got lucky, that's a bad trade, even if it won. Let that sink in. When you adopt that mindset, hope dies quietly, and in its place, clarity is born. You stop needing the market to move your way. You start measuring success by one thing only. How disciplined were you in following your process? That's where calmness returns. That's where confidence grows. Because you realize the market doesn't reward emotion, it rewards behavior. So next time you stare at a red position, whispering, "Please come back," stop and ask yourself, what am I doing right now? Trading or hoping? Because if you're hoping, you've already surrendered control. And until you learn to separate your expectations from your execution, the market will keep teaching you the same painful lesson. Hope has no place in trading. It feels like faith, but it's really fear wearing a mask. You don't need hope to win in this game. You need clarity, discipline, and the courage to face reality exactly as it is, not as you wish it to be. Once you understand that, your entire mindset changes. You stop asking, "Will this trade win?" and start asking, "Did I trade it right?" Because trading was never about predicting what happens next. It's about mastering yourself while it happens. And that, right there, is the moment hope dies and consistency begins. Hope doesn't always appear when you lose a trade. Sometimes it sneaks in much earlier, during analysis, planning, even while you're staring at a chart that hasn't moved yet. It hides behind confidence. It disguises itself as trusting your setup. But deep down, it's not trust. It's attachment. Attachment to a specific outcome. And that attachment turns trading from a calculated craft into an emotional gamble. Think about it. Every trader says the same thing. I know the market doesn't owe me anything. But the moment they place a trade, their brain whispers, "This one must work." That whisper changes everything. It's no longer about logic. It's about proving yourself right. You stop being an analyst and start being a believer. You build a fantasy of what the chart should do, how much you'll make, how it will feel when it hits your target. And the moment that fantasy is created, your brain starts fighting reality to protect it. That's why most traders don't see danger when it's right in front of them. When momentum fades, they call it a pause. When the volume drops, they call it accumulation. When the trend reverses, they call it a liquidity grab. They're not analyzing, they're defending their fantasy. The brain does this automatically. It's called cognitive dissonance, the refusal to accept information that threatens your beliefs. Hope feeds that dissonance. It gives you a reason to ignore the truth just a little longer. It numbs the pain of being wrong. It feels good in the moment, but in trading, comfort is the most expensive feeling you can buy. When you trade with expectation, your brain releases dopamine, the same chemical that drives gambling and addiction. You start imagining the win before it happens. You feel excited, powerful, confident. Then, as the trade moves against you, that dopamine fades. Your brain panics. It wants the high back. That's when cortisol floods your system, your pulse quickens, your hands tighten on the mouse, and your mind starts whispering, "Wait, just hold a little longer. It'll come back." In that moment, you're no longer trading. You're gambling for emotional relief. You've replaced execution with emotion. And the market, cold and impartial, just
Every chart tells a story, not of the market, but of the trader behind it. You can look at two identical setups, and one trader will see opportunity, while the other sees danger. The difference isn't in the candles, it's in the consciousness observing them. That's why trading mastery isn't measured in profits, it's measured in perspective. Every trade you take reflects your mindset at that exact moment. The entry shows your confidence. The exit shows your patience. The stop loss shows your humility. When you start seeing trading as a mirror instead of a battlefield, everything changes. You stop blaming the market for what you refuse to see in yourself. Most traders treat charts like opponents, as if every move against them is a personal attack. But the market has no memory, no emotion, no intent. The only thing it reflects is your reaction to uncertainty. The truth is, every loss you take carries a message, but only the disciplined can hear it. The impulsive trader sees a red candle and feels pain. The master sees the same candle and feels data. Pain is inevitable, but suffering is optional. Pain is information. Suffering is resistance to that information. The moment you stop resisting, pain transforms into insight. That's the mirror of mastery. It shows you not what you want to see, but what you need to face. If greed controls you, the market will reveal it through overtrading. If fear dominates you, it will show up through early exits. If ego drives you, you'll see it in revenge trades. The market exposes every weakness because it magnifies your psychology through repetition. And here's the irony. The stronger your denial, the more painful the reflection becomes. The amateurs run from this mirror. They hop from strategy to strategy, blaming brokers, algorithms, liquidity, anything but themselves. But professionals stare at that mirror daily. They document every emotion, every slip, every hesitation. They treat their journal not as a logbook, but as a laboratory for self-awareness. Because mastery begins the day you stop avoiding the truth about yourself. The mirror doesn't lie. It doesn't flatter. It doesn't judge. It just reflects. When you overtrade, it reflects impatience. When you hesitate, it reflects fear. When you hold a loser too long, it reflects hope. Every tick, every decision, every mistake reflected back at you until you learn. And that's why most people never reach mastery. It's not that the path is hidden, it's that it's uncomfortable. Growth in trading doesn't come from winning. It comes from awareness. Awareness of what triggered the bad decision. Awareness of what emotion you tried to escape. Awareness of how your state of mind shapes your strategy. This awareness becomes your compass, your internal risk management system. When you feel fear rise, it warns you. When greed whispers, it reminds you. When hope creeps in, it catches you before you drift. Here's something powerful. Self-awareness is edge. It's what allows professionals to stay calm while others panic. They know exactly what emotions are trying to hijack their process, and they don't negotiate with them. You can't eliminate emotion, but you can anticipate it. The market will always trigger you. That's its job. Your job is to observe the trigger without pulling it. Imagine standing in front of the chart, watching price spike violently. Your heart races, your breath shortens, your hand moves toward the mouse. But you stop. You breathe. You recognize the feeling. You've been here before. You see the mirror. And in that stillness, something magical happens. You choose awareness over impulse. That single pause, that moment between reaction and response, is where mastery lives. Professionals cultivate that pause like sacred ground. It's their secret weapon. The longer the pause, the clearer the decision. Because emotion is fast. Wisdom is slow. The market moves in milliseconds, but discipline moves in moments. You can't control your first reaction, but you can control your second one. And that's enough. Over time, those small moments of awareness compound. Just like capital. Every time you respond with awareness instead of emotion, you build mental equity. Eventually, that equity grows into confidence. Not the loud kind that brags, but the quiet kind that endures. That's the compounding effect of self-mastery. The market rewards that kind of trader differently, not with fireworks, but with flow. Suddenly, trades feel effortless. You see patterns clearly. You're not forcing anymore. You're aligning. You stop fighting the current and start surfing it. That's what happens when you trust the mirror. Because once you face yourself fully, the market loses its power to scare you. Think about it. What can the market really take from you once you stop needing to be right? It can take your capital, but not your clarity. It can shake your position, but not your peace. The master understands this deeply. That's why they trade less, but win more. Not because they predict better, but because they react better. They've learned that mastery isn't built in the charts. It's built in the mind watching them. The mirror of mastery never stops reflecting. Even after years of trading, it keeps showing you deeper layers of yourself. New fears, new patterns, new lessons. The work never ends, but neither does the growth. Because mastery isn't a destination, it's a dialogue. A dialogue between you and the market, between emotion and awareness, between chaos and calm. And one day, you realize something profound. You've stopped asking the market for answers because you've started finding them within yourself. That's when you understand the truth every professional eventually learns. The market doesn't shape you. Your response to the market does. And that's the mirror every trader must face every single day. Every trader wants to believe they make rational decisions. Charts, data, backtests, everything feels logical, almost scientific. But beneath that logic lives the real decision maker. Emotion. Silent, unpredictable, and powerful. Unless you learn to master it, it will quietly control every move you make. The human brain wasn't built for trading. It was built for survival. It reacts to threat, not probability. It seeks safety, not uncertainty. It loves comfort, not patience. And yet the market rewards the exact opposite. That's why trading feels like a war, not against other traders, but against your own nature. Every spike, every drawdown, every flicker of price triggers ancient instincts. Fight, flight, freeze. The same biological systems that once kept humans alive now sabotage traders daily. But what if you could reprogram that? What if you could build an emotional algorithm, a mental system that acts logically when your instincts want to panic? That's what the best traders do. They don't remove emotion, they reframe it. They turn raw feeling into structured behavior. They have rules, not just for entries and exits, but for emotions. When fear appears, they reduce size, not reason. When greed appears, they lock partial profits, not expectations. When boredom strikes, they walk away, not force trades. When overconfidence whispers, they review risk, not expand it. Each rule is a line of emotional code, converting chaos into clarity. Amateurs react emotionally and justify it later. Professionals anticipate emotion and plan for it in advance. They know fear will come, so they design systems that stay safe when it does. They know greed will whisper, so they anchor their logic before it speaks. This isn't about becoming robotic. It's about becoming self-aware enough to act despite emotion, not because of it. Think of it like building a firewall for your mind. Every time emotion tries to override discipline, the firewall intercepts it. Over time, these automated responses become second nature. When fear hits, your system activates calm. When greed tempts, your algorithm triggers control. When chaos erupts, your awareness stays centered. Because the truth is, emotion can't be eliminated, it must be integrated. Here's how it works on a biological level. When a trade goes against you, adrenaline and cortisol flood your body. Your heart rate spikes, your field of vision narrows. Your brain stops thinking, it starts surviving. Logic disappears, replaced by instinct. That's why impulsive trades happen. Not because your strategy failed, but because your physiology took over. Professionals interrupt this process. They breathe, they detach, they wait for clarity to return before acting. That single moment of restraint, the gap between emotion and execution, is what separates consistency